Good day to everybody, wherever you may find yourself on the planet. I'm in Santa Monica, and you just heard the waves. Believe it or not, it has rained in Los Angeles almost consistently for 2 weeks. Let me remind everybody that you're able to speak, and I want you to speak when you have a question. When you're not speaking, it would be great if you can mute yourself in some way, or see that the background is muted. Otherwise, it conflicts with what you're saying, what I'm saying, and it's not conducive for us to learn and get to know each other. So have respect for everybody here, and if life interferes, mute your phone, and that's appreciated by everybody. So when you have something to say, jump right in. It's not going to interfere with my train of thought. It's what I prefer. These are price and volume charts, and they have it set up in a particular way to take advantage of what price and volume tells us. What you want to do is buy on down bars, and red bars are down bars, blue bars are up bars. That means that blue bars have closed higher than the close of the previous bar, unless of course it's a blue bar. If it's a blue bar previous and the next blue bar or the next bar closes at the same level, it will be a blue bar, and conversely red bars will be red bars until the previous close is taken out by the close, and then it'll be an up bar. What you're seeing here in orange and green bars are what's known as test bars. You got two things on a price and volume chart, so we got two things we can test. We can test price and we can test volume. Orange bars in theory are weak bars. Green bars in theory are strong bars. So we got up bars, down bars, weak bars, strong bars. We want to buy on strong bars. We want to buy on a down bar like the pros do. Pros buy on declining prices to get the best price. Conversely, amateurs love. That means something changed on a chart, and that alerts me to a possible pattern that could be profitable. And you see the timers. These are 3-minute charts, and they're counting down, and they'll change to red when you get close to the bar closing. We don't take trades until bars close, because things can happen even with 5 seconds left. The bar can say, yes, you have a permission trade, price and volume's telling you to trade, but when the bar closes, you don't have permission anymore. So you wait for bars to close. So we want to buy in an uptrend. And here we can see a bottom being put in. How can we see that? There's many things on the chart that are telling us that. This is oil, by the way, CL, this is gold, and we do have a S&P chart that we can take a look at as well, as promised. Meanwhile, back at the oil derrick, this here is a green bar, and in theory is a strong bar, and it does depend where they come in as to whether they're strong or weak, and that is developing a talent. And I'm here for those of you that aren't members of Best Trading Strategies Revealed to let you evaluate me in real time with the intention that you're going to be a member of Best Trading Strategies Revealed. In theory, this is a bar of strength. Whether it was green or not, the fact is, what happened? Price opened out here. Can't tell at this point whether it went up here first, came down, but we do know it came down and closed where it opened, and it closed higher than the previous bar. So this would be a blue bar, an up bar. So buying must have come in here, or price would not have closed above the middle of the bar. Can we all agree with that? Has anybody got an issue with that? Is that clear to everybody? Like I said, you can participate and don't be shy. This isn't for spectators, this is for participants. All right, so look what happened here. Blue bars are increasing volume and red bars are decreasing volume. It's all coded to understand what's going on. So here we have buying that must have come in. And look at the bar here, look at the buying that came in off of that bar. So we want to buy on declining prices, which they have, and we found support at this moving average. And we look up here and we can look at momentum, and this is the same indicator, one by histogram that's faster and one by line which is slower. And on this bar here, what did we have? We had higher momentum. Price was just barely higher than this bar here. More importantly, the longer term momentum is now outside of the shorter term, or the shorter term is inside. This is usually a sign of strength or weakness if it comes to the top here. So, could you buy here? Yes, you could. But you don't need to. You just have to wait for your opportunities to manifest. So, this is obviously pros came in and stepped in and bought here. This was not done by amateurs. Here we have a bar of strength. Here we have a bar of strength on price. Price closed up above the middle of the bar, and also it found support at the same moving average. Found support at the same moving average, and you see price closed in the middle of the bar above the other moving average. So on price alone, this is a strong bar. So if this is truly a bottom, and they call this a Sophia. This is a Sophia in all her glory and all her beauty. She closed up above the middle of the bar, increasing volume. We have a market that's oversold and been as oversold as you can get on the previous bar. This should be a bottom. Here we have strength by price. Here, this is coded yellow for the purpose that it shows you what I'll call inverse divergence, meaning this is a down bar. Momentum should go down, it should not go up, but momentum went up on this bar, on both of these inputs, the slower one and the faster one. The slower and the faster one, the inputs, the momentum went up. But price had come down, it's a red bar. But we have strength also in volume. Volume here, this is telling you that volume is less than previous two bars here. That's why you got these dots. This was strong, this confirmed the strength. You could easily have bought off of this bar. You could easily have bought off of this bar right here. And the tightest stops in all of trading, and why you buy on down bars, here's the next bar. Where does that bar open up? That bar opens at 53.34, and you can see the low is 53.34. Price and volume, the only two leading indicators, give you the opportunity to buy with pros on declining prices and sell with pros on rising prices. Welcome.
Something we got to make. We remember we're on remote pros, so how do we do
it? Was somebody asking me a question?
So, can you hear him screaming?
Oh, so long.
So can you see it?
I can hear somebody talking, so if you're asking me a question, great. If you're not, mute yourself, please, so everybody can hear.
Log back in.
All right, so you could buy right here, and we saw 53.34 was the low, all the way across here. Never happened. Never went below your entry point.
That remote.
53.34 went to a high of 53.52.
Yeah.
So that's $180 off of a buy from here. You have inverse divergence. Good sign, good location. If that didn't work, then you have a trender here that rolled over to tell you were in an uptrend. This told us we could be going into an uptrend. Okay, somebody is disturbing us. Come on, guys, have some respect for the rest of these people here and have some respect for me. I need to concentrate so I can help everybody. Thank you. All right, this is a down bar. What is this black line? This is a order flow level. This is where amateurs and pros exchange money. It's not an automatic thing. It's a skill set of art and science where to draw them. They're inflection points where money has changed hands, as I said, between amateurs and pros. So, if this wasn't enough to get you to buy off of the bottom here, then we had a down bar finding support at the trender and the moving average, but dig it. We're oversold here. This cannot go more than minus 133. That's all it can do. It's at 133. So you want to buy on a down bar when a market is oversold. And here was it telling you price and volume, there's going to be a trend. When this line here stayed above the zero line for 4 bars, 5 bars, then it's telling you the trend has probably changed. And so here was the easiest, most straightforward place for you to have bought the market. No ifs, ands, or buts about it. It's a pattern. You put in a bottom, you come up, you retrace to logical support, and then you move to the next level. And reverse that. Take this and flip it over. And then you'd see just the opposite. Instead of a bottom, a top, a bottom, a top, bottom, top, you'd have just the opposite. So, that's what happened in the oil pit, and prices still going up. We shall see. This is a floor trader number. This is a resistance number for the day. And what's happened with price? Went through it, got attracted back to it. Price is either accepted or rejected at these inflection points. And these are the points where you have to determine money management, what you're going to do. Exit, take partial profits, take full profits. As I said to begin with, the other thing is move your stop up. You have a lot of freedom, you have a lot of choice in the matter. Okay, we're seeing weakness here. Look at the weakness here. We got price as high as it was there. But look at the momentum is falling off on a longer term basis. And this was on increasing volume. When you get up here, I call it the red light district, and this is what's known as stopping volume, or reversal volume. That doesn't mean it's not a counter trend trade for a few minutes. When you get volume at this level, it usually causes price to at the least go sideways, and at the most reverse. And then there's in between, where it reverses for a while and then resumes the trend it was in. But we have weakness here. Look here, momentum's falling off. That's why these are magenta. Price is going up, but momentum's falling off. Here we have price went up here, and a lot of effort, a lot of money came in here, but price could not go up here and stay. It came down to the floor trader number. Here, volume is decreasing. It's not increasing. Price is falling. Here again, we tried to get out here. We'll see about how weak that is. Here, look, volume came in here. When price came up here, somebody had to be selling in here. And why didn't the pros take out the high here? It's very profitable because they know amateurs want to buy right above here. Amateurs won't buy here with pros, or here with pros, or here with pros. No, no, no. They're going to wait for the breakout. And they think they're getting in on a sure thing, and most of the time they are. 80% of the time. Sebastian told you this last week when we had that session with him. So, you have to ask yourself for the moment, why didn't pros take this out? Well, right now we do have a bar of weakness. We're pretty well overbought. We came well off the high and closing in the middle of the bar, and we did it on increasing volume. So, in theory, we should begin to see lower prices here. But that remains to be seen. Alright, so, and here's where the original buy signal came in. Where is the green bar? Where are these green bars? Supposedly bars of strength. They seem to have today been at the bottom, so then over here where we were absorbing. This move up here, this volume here had to be absorbed. And you found resistance here, double resistance. This Cayenne one tells me it's a floor trade number from a previous day. This is an order flow level, and you see how effective it was. And we got trapped between the moving average or the trender and these lines here. And then what you got, a test bar, supposedly a bar of strength. And what happened with price? After a run up and a run down, and found support here, and price is higher here. So every green bar here, and that's what I say, depends where you're at, in the conditions you're at, whether these orange bars or green bars are something to pay attention to, or even where the dots are to be paid attention to. This to me is a party dot, meaning I'm happy to be in here because pros are holding the volume down. When pros bring in volume, price tends to go sideways or reverse. Contrary to what you hear on the news stations, high volume tends to be a reversal signal, not a continuation signal. I know that shocks you. All your life you've been told the opposite. And all your life you've been told falsehood. And for most people, it's outright lying to you. They know better. They just don't want you to know. Okay, let's go look here at gold. We're expecting oil to drop down here, and here it's doing it so far. We expected it on this bar. We got two bars here where we dropped a little lower, so maybe we'll find some support at the moving average and the floor trader number. But so far, they have told us the truth, that there was weakness up here. You could have sold this top right here at this bar here if you wanted to. This is a Sophia type bar. Price went up, couldn't take this out. Even if it did take it out, didn't matter. Fact is, it closed down here. You ran over, bought, and you did it on increasing volume. This is distribution by professionals. So we'll see if these things become support or not. But at least for 4 minutes, price has done what we expected it to do, and we did it in real time. And none of this is mumbo jumbo made up stuff, because this is all live. Amazing, novel concept, huh? All right, so let's go here and see what we're doing in the gold market. Okay, so here was your high in gold. And look at your divergence between here in price and here in price. And here you have divergence on this bar versus that bar. Look how high above this bar went and closed. But The indicator's telling you the momentum was weaker on this bar, and it should have been stronger. And oh, that was a top. And I said to you about high volume tends to be a reversal signal. And again, this is spontaneous. Okay, did everybody see where the highest volume was? Right at the top of the market. And right here's high volume, and it reversed. Truth in advertising, kids. Telling you the reality of it all. Not this nonsense that you've been exposed to in your career in trading. And most of you don't have a career. You have nothing but years and years and years of failure. That's because you haven't been trading on the facts. You've been trading on delusion or illusion. Okay, so look. Here we have high volume. Now see, here's volume divergence. Price is going lower, but volume is not increasing. One might think there could be a bottom being put in here. Look at the divergence here between this momentum indicator. That's showing you divergence. Look where the orange bars were in a downtrend. Now look here at the bottom. Different market than oil. You're looking at these test bars, which come with the software. Here's the Sophia. Open, came down, and closed on an absolute high on increasing volume. The only thing that could be greater here is if we have this market over sold. And it ain't. And worse, you got inverse divergence here. This should be going up, not coming down. This one, the longer term, is going up. Not the best of signals, to be sure. So we can wait. You come out here. This is permissible to have shorted. Okay, so I was starting here to say about this is the bottom being put in, and look what price is doing here now. And look at the strength here with these bars, and put a line right here. So you got to look in the background and tell you what to expect in the foreground. Look at where this line is here. And you think it's a coinky-dink that the market found support right here? And if you think that it's a coincidence that that price found the bottom right here, you're not doing a very good job of reading the chart. And that's why you look in the background here. Look where this happened. Look at this. This is, like I say, an art and a science to draw these order flow lines, but this is where money was exchanging hands. And this is where the accumulation took place by professionals. And bar's been going up here. Let's go back to that oil chart, and let's see if price continued to fall. It sure the hell did. It's just coming off of its low, and it did get below the floor trader number, and it did come close to the moving average, and look where it is right now. So we call this a bottom, and look what price is doing. We call this a top, and look what price is doing. Can we stop now? Has everybody learned enough? Who's got a question? Who's got a compliment? Participation. And if you're not going to participate, I'm going to just shut this thing down. And if you think I'm kidding, I'm not. So I'm going to go through names then. Carlton. What is it about price and volume that interests you, Carlton? You can put it in the chat box so you can talk. I have to ask you, Carlton, what are you doing here? You hear the clap? Okay, David. David, you want to participate? How about you, Jen? How about you, Mr. Castor? Oh, Jim, you like it so much you're here twice. Oh, same with Peter Roberts. Well, folks, if you got no questions about price and volume, and what we just saw here and went through, and price moved exactly as we said here, I don't think there's much I can do. Chat wasn't working. Okay, Carlton. What is it that you'd like to say now that the chat's working? What are the cayenne dots? Those are volume. They have to do with no supply. It means that professionals aren't interested in taking prices down. And the red dots are there for no demand. Professionals aren't interested in taking prices up. Again, it depends where things appear. And if you're buying, you want to see a red dot. And if you're selling, you want to see a cayenne dot on the next bar. They're party dots. Pros don't like the amateurs getting on board until they're ready to reverse price. And that's why amateurs lose money constantly. Anything else, Carlton? And you guys can speak. You don't have to use the chat. You can talk. Oh, I've got one person here. Carlton, how do professionals bring price down? They short sell? Is short selling taking place down here and buying? This is distribution. You know, prices rise, and I like the simplicity of it all. Oh, I didn't know whatever you said, Johan. I missed it in a set because I was looking over here, and that thing popped up over there. So if that happens to anybody, I'm sorry. Like I said, if you can speak here and wanted to ask a question and not the dog barking or a child crying, we're in good shape here. So what the professionals are doing is they have no inventory at certain places, and consequently there's demand. Now, this is really big one. I'm going to stand up for a second and take a drink of water, and then I'll tip you off to a big clue. Contrary to popular misconception, it is not buying by amateurs that causes price to rise. And it's not selling by amateurs that causes prices to fall. What really is taking place, as oil may be about to set a new low in the downtrend that price told us 1, 2, 3, 4, 5, 6 bars ago, and gold is still going up, at least it was to the last tick. Anyway, as we were saying, amateurs buy on rising prices and they sell on declining prices, and pros know this. They're the greatest psychologists in the world. So this is what they're doing. They cause price to go up by buying on the bid, on the ask. And so price continues to rise, but then they have no more inventory. But the rising prices have caught the eye of amateurs, and they're thinking, hey, price is moving in a direction, I'm going to get in on that direction. And they do, and that's when they end up having a loss. And if you remember, I asked, why didn't they take this high out here? that was a good opportunity for them to go up here a couple ticks, get some amateurs long, and then do what we're doing here. We're now as low as we've been on 3 bars now. We're going to have a new low here. We'll find out soon enough. This is definitely a bar weakness. Price went up here, couldn't break out of here. Look at that line right here. Trade station will work there. There you go. Look at that line. Price couldn't get through there. Chart tells you everything you need to know. So, new low, new low. Okay, so what we're talking about is distribution and accumulation of inventory. This is a merchandising market. That's a second thing that they taught me, or 1A, if you will. He said the market was rigged, and it's a merchandising mechanism. And it's simply a retail. Buy and sell, buy and sell. Wholesale and sell at retail. And that's the way the markets work. That's where you see the volume. This was all accumulation. And now we'll see if we can't get through here. I don't know if we can or we can't. It's not my job to know that here, but if I look in the background and I see here, well, I can see that there's got to be some orders on the floor. There's got to be some business taken care of through here. So we're going to need some effort to get through here. We're going to need some volume. But right now we're not seeing it. And we're also in an overbought situation. We'll see what happens. Okay, thank you, Carlton. You get a gold star. I appreciate that. All right, now that Carlton's broken the ice and Johan typed something in here, who else wants to participate? Why are you here? I'm at this now 27 years. I'm taught by the foremost expert in price and volume till he died in 2004. Author of 3 New York Times best-selling books. A man that was so well respected that J. Paul Getty, the richest man in the world, entrusted Richard Ney to trade some of his money. You're on with me. How come you're not asking questions? How serious can you possibly be as a trader? And there's some of you that are here that I'm not referring to. It's the new people that I'm referring to. The people that aren't involved. Is there an unlimited number of futures contracts? I understand the stocks, but, well, the last thing was there. Right now you can see here the volume, Carlton. And gold today, 176,000 contracts have been traded. And over here in oil today, 350,000 contracts have been traded. The S&P should be by now over at least 800,000. On a good day, you're going to have 1.5 million. It says close to 600,000 in the S&P. Here we can go to the S&P. And market's been in an uptrend all day long, so only thing you want to do with this market here would be to buy it. And I have no order flow lines here. This is a good clean chart. These are floor trader numbers, and I'm the only one that has previous day's floor trader numbers here. This is a previous fair value. This is a previous support number from the day before. Magenta's too close to red. Previous days are cayenne, where today's days are blue for resistance. So this is a resistance number. This is all done automatically by the software. Okay? So, we're looking to buy. The market's in an uptrend. All you got here, this is a perfect way to tell trend. Nothing but pivots. Bottoms, top, bottom, top, bottom, top. It's like a staircase. Tops above tops, bottoms above bottoms. You also have the trender here. You also have this trender here that's telling you that the market's in an uptrend. You also have this cayenne here that never stays below the zero line more than 3 bars. As I said earlier, this needs to stay 4 bars, 5 bars, then there's a possibility that there is a true trend change. So, now all we want to do in an uptrend is buy on red bars. And we want to buy on red bars that are particularly oversold. So, we know that this here is as oversold as this market can get. So let's just go and use these 3 and see how we would have done today. Now, I really do expect people to start participating after we go through this and you see how straightforward it is. It's simply only to give you respect to price and volume. It ain't about me. It could be about Richard Ney, but it ain't about me. I've been blessed that I have this skill set. I never forget about it. All right, so what happened on this bar? It's a red bar. Next bar opened up here at 62.50, 22.62.50, and the low has been 20. The low has been 22.62. Here, the entry would have been at 22.62, 50 or 75. Never went against you. If you were using a $75 stop, you had no problem staying in the trade. Here's the next one. Again, a perfect entry into the trade that's made you money. This entry here got you in 22. As we said, 22, 62.50, make it 63. We're now above, make it 71. That's 8 points. This is a $400 run from entry right there. If you're using 4,000 margin, you just made 10% on the day by staying in this trade. And the trend has not changed.
Oh, there we go.
Somebody asking me a question? I hope. Is there a miracle? Somebody's going to ask a question?
Pick me out of this, Senator.
When you see the red bar developing when oversold, man, this is the first time I'm using this software, and these questions don't stay long enough here. Oh, there they go. Just look. Okay, there's something that Johan, Carl, when you see here they are, we're learning as we're going along. And you see the red bar developing when oversold. Do you buy as soon as the bar closes? If it has permission, yes, good, Carlton. Yes, exactly. That is true. That is exactly. As I was saying in the beginning, you got to wait for bars to close. Because 5 seconds before a bar closes, it could say yes, and when it closes, it says no. And then you get yourself in a losing trade for no reason. So yes, the same thing with blue. If you're looking to sell, and you got a blue bar, then you're waiting for the bar to close, and that's why the timer's here. This is going to go off at 36, 35 seconds. Watch and listen. Okay, we just had the cash register go off, and it's changed from white to red, and in 15 seconds it's going to go off again. So we have 3 winning trades here in any one of these for 2 points. Would make you a happy person if you had a trading plan that said, I'm going to trade 20 days a month, and that's what there are, an average of 20 days a month to trade. Some months 21, 22 even. But we'll say 20. And if you make $100 a day net, that's $2,000. And if you trade with $4,000 margin, that's 50 cents on the dollar for the month. That makes you one of the all-time greatest unknown traders that ever was or ever will be. That equates to taking $1 million and turning it into $7 million without compounding in the course of a year. Can we have some respect for the math? I should have brought up a lot of issues for you people to talk about. So let's get to the chat box. Let's go to the audio. But let's participate and work together here. All right, well, we did say that this was a top, and price, since we went to the S&P, did go lower. And we did look at this as a place to buy, and price for a while went up, and it's still trying. And here's a good place to have bought right here, what I said about being oversold. I mentioned about the dot and strength, and buying on a down bar, and support with these moving averages in a trender. Okay, we figured out how I can get to the question here. Let's every question. Okay.
What's that?
All right.
A setup. Okay, all right. Very good.
Okay. All right, Carlton. Thank you, Boris. Okay, he says if you recall correctly, low volume is the direction of your trade is a good thing. Recall low volume in the direction. Yeah, that's a good thing, Carlton. Like I say, high volume comes in at tops and bottoms, and low volume comes in between. But you get that divergence after the high volume, then you want low volume when you retrace and test those areas. Fabulous. Okay, so let's go back to the S&P and see what's happening here. A whole heck of a lot. All right, what else can I'm going to go back to sorry to interrupt, but is there volume? Volume, are you talking, Jim, about on the chart, or are you talking about talking that you're not hearing us? Well, try it this way. Volume is down at the bottom, everybody. Right down here is the volume. And blue, to refresh your recollection, means that volume is going up on that bar. And red means that volume is going down. So Jim's saying he can't hear. Carlton, you're a sharp cookie. Yeah. You always want confirmation. When a bottom or a top is put in, you can figure out where they are, and you can buy and sell them with price and volume. However, until you develop that skill set, then the next thing is that you want to wait for that confirmation. And so if you said that this was a bottom here, then you're looking for the next bottom to buy. So that is it. It's what I call the second wave. If a bottom gets put in, price goes up, it comes down, and the second wave comes in right here. It's a straight pattern. Pattern recognition was the second thing that they taught me. The first thing they taught me was markets are manipulated, which is a great thing. Market merchandising is what it's all about. Transferring money from the many to the few, from those that make money by earning it, by working for it, to those who manage it. Market was set up for one purpose, to transfer money from the many to the few. That's why the vast majority of people are losing money. Okay. So let me see if there was another question or something here. So Jim is saying that he can't hear me. Yeah, yes, yes. There is volume. No idea what your issue is. Sorry. Okay. All right, so, Keith, the market becomes range bound, do you just go elsewhere? Wait, is it last high volume bar an effort to rise? Okay, good. All right, let's see. Is the last high volume bar, is this the bar that you're referring to? Let's make sure you're referring to the bar. And again, you could talk and just say yes instead of yes. Okay. And you asked me if this was, this should have been stopping volume, and again, we talked about this before you asked this question, and when you get this kind of volume in this red light district here, odds are it's going to cause the market to absorb it. And it's taken 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bars now, 30 minutes to absorb this volume. So what our technical expectation was that when this high volume came in and we were extremely overbought, that price would have a tendency to go sideways with a downward bias. And this could now all be distribution, because look what you're seeing here. You're seeing this. Let's put the line in here. Come on. All right, right there. Look, price went as high on the orange bar as it did here. And this is a bar of weakness. Price went up, it came down, closed off the high. See, they broke it out right here for people. And the amateurs want to go long. And at this moment, what we're seeing here is the price. I'll get to you, Keith. Thanks, Keith. Now, we'll see what happens here, but I've got weakness. I had weakness here. Obviously, in the uptrend, this was another one of those oversold bars. 1, 2, 3, 4, everyone so far has been a great place to buy. So you got to go with the trend as far as that's concerned. But we'll find out what happens out on the left here. Let me get to those questions here. Okay. I think somebody had. All right, let's see. Do you always wait for test bars? Okay, I got that one, yes. There's fine, no idea. Carlton, this market becomes range bound, go elsewhere. Okay, if the market becomes range bound, yes, if you're an amateur and you're just learning how to trade, you're usually better served by waiting for a breakout in one direction or the other. But when you do know how to read price and volume, you can anticipate, and that's the beauty of price and volume, you can anticipate the direction that price is going to go by adding up the bars. Yeah, and I'm not saying these bars are this or that. I'm just giving you an example. This bar, you say, oh, it's a strong bar. Oh, this is a strong bar. Here's a weak bar, strong bar, weak bar, weak bar, weak bar, strong bar, and you do a tally. Okay, you got so many strong, so many weak, and it give you an idea as to where the market's going to break out. So smart, very astute on your part to bring up the point that you did. That if you're an amateur and the market gets range bound, it'll break out. You're not going to miss anything. The question at the end of the day is, did you make money? That's all. You made money, that's all that's important. And every day is not going to be the same, unless you're going for $100 a day or $200 a day. Okay, we had that. Keith, I have watched many, and it seems hard to find setups, yet you find so easy. Yes, yeah, I find them easy all the time, Keith. And I was the original mentor for Trade Guider back in 2003. Tom and I had nothing but respect for each other, and a couple months before Tom died, Sebastian and I tried to call him on the phone and talk to Tom, but he was sleeping by the time that we called, and then the next thing I knew, Tom died. So, yeah, I understand about TradeGuider, and I understand where you're coming from here. The patterns are the same for everybody, and real straightforward. If you're an uptrend, all you're looking to do is buy. And so far today, simply by going with these oversold conditions, every one of these has been a winner. We'll see how much of a winner this one is. You say you got filled at 22.71 in the corner, and so far we've been to 72, so it's only made 3/4 of a point, but it is trying to break out, and the high today has been 72, and that's where we're at right now. So we'll see what happens here. So yes, to make it simple, if you go back to what Johan was saying earlier, way back up here, he did say something about, I like the simplicity of it all. Just look at the patterns, learn them, and then when you show them, trade them. So, hey, thank you, Johan. You put that on the board, and I remembered it, and consequently, it applies, Keith, to what you're asking here. When you pointed out the patterns correctly and how to read them, this is very simple. Money just is obscene once you figure out how to trade. Again, I talked to you earlier about making $100 a day per contract, and that's $2,000 a month. And my, oh my, every market's providing it. Every day the markets are there. And it's just a matter of waiting for your opportunity to take a trade. Now, would I like this to have closed up here? Sure. Would I like it not to be on increasing volume? Sure. Would I like a dot under here? Sure. But I did have support. You have support here. Here's another down bar at support. And look at these bars. We talk about what's in the background. Strong. Here's some strength. Here this bar went up and closed above here. That's strong. This one found support here, closed up here, that's strong, and this is strong. So if you're going to go along here, I'm going to say price should move up from here. So that's simple, Keith. That's straightforward when you know what to look for. If you don't know what to look for and you make it complicated, yeah, it's really difficult and very frustrating, and it takes a lot of time and effort. All right, let's go back to these other markets that I promised to talk about. Okay. Here we had strength. Here, look, here's that high volume, and it took all of this to work off that high volume. But where did we find support? We found support on an order flow line. We found support in a floor trader number. All right. For that, where are the signs that the absorption is about to end? All right, first you see the market got oversold. Carlton. I'm starting to fall in love, Carlton. I like it when people participate and I can be of service to them. That's what we're here for. Too many of you guys are losing money for no damn reason. You shouldn't be losing money. You should know how to do this. And money, they give you the money. They throw it at you. All you got to do is bend down and pick it up. Okay, so, look, we had the market was oversold. And we found some support in logical areas here. You got an order flow line, you got a trender, you got moving averages, you got a floor trader number here. And so the market range bound in between these areas, actually between the floor trader numbers and the like. And they all came in for preponderance of support, strength of support. So then we get a bar here, we came up here and closed here. So we closed higher and it was on increasing volume. That to me says there's a possibility we're going to go up, but I'm not really sure because I would have liked to close higher. But the next bar doesn't take this out. Oh, I love this. And you get a dot. No apply. Pros are not interested at this point in taking prices down. And the longer term came outside of the shorter term, and look at the divergence you have between this bar here and that bar there. This divergence. That's telling you the price should be going up. And what happened? Look how they did. Just like I said, they love to take these lows out, get amateurs short. They did it once, they did it twice. Rape, pillage, and burn the village. So we had strength there. This is a bar of strength. I would ignore that. I'm not real happy about this CC going down, but so be it. We come down again. Strength. They ratchet it down here. This is a beautiful Sophia. And they opened here. We know they came down here. Buying by professionals came in. I don't particularly like to necessarily buy it up bars, but if you didn't buy it at the close of this bar, which you could have, look, price went down, but both momentums went up. That's like on two different time frames. This one's like 3.5 times longer than that one. So on two time frames, you're finding price moving up, and that's how I would have seen, and I would have ignored these. Look, we could have gone up, could have come down, but bottom line, we closed up here. Whatever we did here, again, we closed up here. I gotta see these as strong. I'm not seeing these as weak. I'm seeing buying must have come in here. Yeah, where's the blue? There's blue volume. So that's how I could see that. I know some questions came in, so let's do that here. You're welcome, Wayne. Okay, Carlton, what are the signs that... Okay, we did that. Is that a Sophia bar, second green one? This one here, yeah, I just said it, and you said it afterwards, and here's another Sophia bar here. And they tend to be, yeah, it doesn't have to be green. It can be right here, and it'll still be a Sophia. Look at that. Now the issue is here, there was no increasing volume. But we certainly are the hell oversold, and we certainly are a logical place of support here. And here the order flow line became resistance. Oh, wow, we've been here an hour. All right, John L. Come on, John. What can we do for you? What if you always wanted to know about trading, John, and you didn't have a person to ask? How about you, Peter Roberts? Peter? F. Thomas. John L. Do look at higher time frame in your analysis. No, I do not. Another great question. No, I just use the chart that I'm on. That's distraction. The chart itself will tell you what you needed to know in every way possible. You don't need to go to another time frame. The shorter time frames are going to shift over sooner than the longer time frames. So if you're using a longer time frame and you're waiting, but you're going to get in trades late. Here's the pattern here. We went up. We were overbought. We came down. Here's the bar went up here. And yeah, look at the distribution here. I saw that question. Look at the volume up here. So then we come down here and we get up bar with a dot here. Hey, we'd love it to be overbought, but it doesn't always give you exactly what you want. And nonetheless, here's a pattern. Top, bottom, top, below the previous top. This is confirmation that the weakness here. And what did you get at the top here? You got an orange bar at the top. What a coinky-dink knot. See, they had no interest at the time here, and that meant there's no volume coming in here, and then price did come down like expected. And here, look at the divergence over here. Almost out here, I'll do it this way. Come on. Okay, it doesn't want to enlarge. Now you can see here, over here, the momentum was higher than it is here, but price was higher here. So here, and here, look at the divergence between this bar here and that bar there. That's true divergence. Up bar versus up bar, and we're totally overbought over here. And where do we find resistance? Right here at this order flow line. And where do we now find support? At this other order flow line. And that so far is 150 bucks. Okay, let's see if I missed any question. Distribution on, yeah, we talked about that. Okay. Anybody else here? Come on, get on. This is a merry-go-round, kids. Drop. Get on the horsey. Come on. Well, so where are we finding support? Right here where we were before. Look, they didn't take this out here. Okay, well, then let me go over here. This is my course. My course is $1,497, and it includes the indicators for either TradeStation or Ninja. I have them for Ninja 7, and I'm talking to coders now about Ninja 8 if you have Ninja 8. This here is the products page. You can go here to Best Trading Strategies Revealed /products, or if you went to here's the home page, beststrategiesrevealed.com. You go to the products page, and then you'll find that link to sign up for the course. This is, if you don't already have it, get the complimentary copy of the Pocket Guide to the Habits of Professional Traders by Richard Ney. This is one of the books that he had, the Wall Street Gang and Wall Street Jungle. The right names, Gang and Jungle, tipping you off. You've seen his car, the license plate says wake up. So if you don't have this, it's all in his words, other than I changed market makers and specialists to insiders and professionals, and I broke it down into a couple sections because people seem to like sections. But other than that, it's 100% what Richard Ney had to say when he gave it to me in 1990 when I worked with Richard. So this is the home page, then the products page, which we went to, and when you click on the button on the products page, it'll take you here to the checkout. And you just put in your information, and with the course comes 30 days, 1 month of the daily subscription. I have emails that I send out daily. We go to the course outline here, assuming that the internet won't fail us. But anyway, you get 30 days of the daily emails that talk about the patterns or potential trade setups, other interesting things about your psychology, the inner game, other things of that nature. Inner game's where it's all about. The patterns are the same for everybody. Ah, we went here. Okay, on this page, each one of these is a 30 second to 90 seconds sample of each of the modules here in the course. What the stock market is, the mindset, the emotional set, your concepts. Here's the Ney stuff, real important. And we go on to what to trade, where to put your stops, your order flow lines, your profit targets, how to read the charts. See, people can only concentrate for 35-40 minutes, so I knew to stop the presentation on these areas and make them into 2 parts. What the trading process is, how to trade gold, And then the miracle of compound interest here. And there's all kinds of bonuses here. There's webinars that I did with members that updated on the hopefully the internet will work. Okay, good. Looks like we're going to get there. This is the membership area. And also have a crash into course to avoid every market crash. And then here's the update for indicators. This was done about 9 months ago. And this was done with people who had become members at that time. Here's some archives here. Here's bonus materials. Napoleon Hill's book. It's a must read. I was blessed to have read that in the 70s. And then Richard Wyckoff of Price and Volume Guide, who was popular from about 1900 till his death in 1934. This is great to get inside the inner game. Joseph Murphy, The Power of the Subconscious Mind. I wrote the definitive guide to Price and Volume. And then you got your name report here, which is what I used to get when I subscribed before I took the course here. When I took the course, I got the guide there. Then you got some archives here, which are, again, webinars that I did several years ago with new members, once a week. And then you've got your indicator video, how to set up your charts. But I have templates, so that takes care of itself, but you understand the indicators better. And then the indicator update. So, for anybody that would like to become a member and work with me and change your relationship with money, I'm available here. All you gotta do is go in here and sign up. So I'll close that down now and stop hogging the bandwidth. And we can see oil prices have continued to fall. And we can see from here the price has fallen. So, can you go to oil's opening today? There was a huge spike in volume with a rapid click. Okay. Jim must be having some real problems with his internet connection. You want me to go to oil in the beginning of the day here, so we can do that. If the internet will let us. Okay, well I can do it this way then. If it doesn't want to enlarge the chart, I can do this. Okay, Carlton. Here was a large block of volume here, and it was conflicting volume. I don't know. Obviously, it opened here. Price must have come up here, came down, found support here, and closed here. And we were overbought here. And this is a good time to trade, by the way. Off the opens at 6 o'clock Pacific, 6:03. The market has a tendency to make a move there. And here, this bar looked like they were buying, and voila, they did. This bar went up from 13, which the low was 12. And it went to high at 26, only 140 bucks. And it hit resistance here, and then you had high volume again, which was less than that. I don't know why this volume came in here. I can't answer that. All I can do is say, this must have been buying, and it did give you a push up. And then this volume here seemed to have stopped the market. We came down, and look, again, did we take this out? Buy a tick or not? I don't know. It'll be a penny. Low was 52.99, and here the low was 52.99. So they didn't take this out. And you had your green bars here. But I can't tell you, Carlton, again. If I don't know, I don't know. And so sometimes you just don't know. And why this came in here, beyond, if it was rollover, something like that, I can understand it, but it's not a time when news would have come out. Okay. So, David, you got anything you want to talk about? And hey, if you guys want to contact me, I'm at Prosperity Trading. Prosperity Trading at roadrunner.com if you want to contact me. Okay, David, anything you want to talk about? How about you, F. Thomas? Jim, you're the guy that having sound problems, having connection problems. What instrument could be traded at 10 p.m.? At 10 p.m.? Let me see that. Here, I may not know the answer. At 10 p.m. Pacific. Keith, I don't trade overnight stuff. There's no need to do it. In my world, there's more than enough money for me to be made in 27 years being a day trader. Yes, I do take positions and have position traded, but my biggest focus has always been on day trading. So I don't know what the hell goes on at that time of night and what can be or can't be traded. Just look at your charts. Hey, guys, it's real simple. Want what the market wants. That's a simple. That's how you become a trader. Is you want what the market wants. How do you know what the market wants? You let it unfold and make the decisions for you and tell you what the market wants. And here, we saw that this was and one of you guys called this out about distribution, and the market here has had a beautiful $250 drop for you. From above 13 here to 10 and a half. That's a beautiful 250 bucks. And market came straight down. And look at oil and gold pretty much at the same time decided to collapse. This is pretty far out, but the markets do. And here, if you wanted to stay in this trade and said, hey, I'm not going to get out of this trade until I get a blue bar. You money manage this all the way into this trade, and you're in it all the way at the bottom. Here, once you went short, you had one up bar and two up bars. Oh, we're going lower on the oil. Okay. All right. Okay, guys. Last call for alcohol, as they say. I'll be happy to give you guys more input and look at things with you. I need you guys to give me some direction. All right, well, I appreciate the opportunity to share the brilliance of price and volume with everybody. And I wish you all the best in your trading. And if ever you feel that I can be of benefit to you, you know how to get in touch with me. So have a wonderful trading day, everybody. See you soon.